Hello and welcome to BTTV. I'm Siddharth Zarabi, and joining me now is Mr. Prashant Kumar, the Managing Director and CEO of Yes Bank. Welcome to the show, Mr. Kumar. And our viewers would like to straight away uh, uh, note the fact that this is the second year of full year profitability, but there seems to be a decline in profitability. Can you take us through the numbers that you have seen?
So yes, this is a second full year of profitability for us, and the current quarter profit has been 202 crores, uh, which is an increase of more than three times as compared to the December. But yes, as compared to the last financial year, there is a decline, and this is mainly because of the higher provisioning cost. And this higher provisioning cost is not because of the higher slippage. This higher provisioning cost is only because of our strategy to strengthen the balance sheet. Like if you see our provision coverage ratio has gone up to more than 60%. And our net NPA and the carrying value of security receipt is 2.4% against 4.8% in FY22. So our provisioning requirement has actually, as a strategy, has gone up by 50%. Otherwise, our operating profit, and I'm talking of a normalized operating profit, has improved by 22%. So I think today, like we are very, I would be saying, confident in terms of the strategy which was adopted by the bank for last 3 years is yielding results. We are moving in the right direction. We are continuously strengthening the balance sheet so that the future revenues they don't have an impact of the legacy. So, like next year, the provisioning requirement for our NPAs and the security receipt is just a 80 basis. Okay. So
Okay.
basically, the kind of efforts which have been made to strengthen the balance sheet would actually start yielding those big numbers from the current financial year onwards.
Since we are speaking about the current financial year onwards, please expand on the mention that you made of big numbers. What's your outlook?
So we would be actually seeing like the operating profit to be in this range between 20 to 25%. But since the provisioning requirement would be coming down, we would be seeing a ROE trajectory, which is currently 0.2%, would be around 0.5% for the FY24 and definitely around 1% by FY25.
Uh, Mr. Kumar, could you also explain to our viewers the outlook as far as credit offtake is concerned in the current financial year? We've seen that interest rates have hardened. You also had to pass on the cost, and overall macroeconomic environment is very clear to everyone. What do you see happening as far as credit demand is
I think now rate of interest has almost peaked out. Okay. We have seen like last policy Reserve Bank has not increased the repo rate. And the expectation is also like after remaining stable at this level, it actually would start coming down maybe by the end of the year. Okay. But despite like interest rate of interest going up, we have not seen any slowdown in the credit demand. Even like if you see the RBI numbers, even during April, there has been a good credit growth from all the banks. So I think we are seeing, and this is exactly reflected in our numbers also. On the retail side, our growth is 38%. MSME growth is also 22%, and mid market has grown by 36%. But overall, like for us, it is around 13% because there has been a run down on our corporate book again as a strategy, okay, which has actually degrown by 25%.
okay?
But going forward, we would be looking definitely overall loan growth between 15 to 20% because we
15
are
to
at 15 to 20, between 15 to 20, where retail would continue to grow 30% plus.
And would that mean that the rate of degrowth of the corporate book will continue at the same pace, or you think it will stabilize?
I think it has already peaked out. It has already
Oh,
peaked out. Going forward, it would be either flattish or it would be growing in a small number, but it would not come down.
How is deposit growth panning out, Mr. Kumar?
For deposit growth, it's a struggle for everybody, but I think we have seen very good efforts from our teams on this side. Though our deposit end of period growth is around 11%, but our average deposit growth, I'm talking of average numbers, monthly averages, has actually gone up by 16%. And
Okay.
similarly, our CASA deposit, average CASA deposit has grown by 26%, and average current account has grown by 30%, which actually brings the advantage on the cost of our deposit. Okay. So today, current account is 15% of our deposit, which is a non-interest bearing. So I think we would continue to make efforts in both these directions. But I think in the current scenario where there has been a huge fight on the deposit side, we have been able to grow very decently on both CASA growth and current account growth. And now the differential between fixed deposit rate of our bank as compared to best in the class has come
Hmm.
down significantly.
Okay. On an aside on that point, we've seen a recent trend where tech companies are now getting into some sort of banking activity and also offering much higher rate of interest. That, of course, is overseas, Mr. Kumar. But let's say by the end of the year, what would you tell the average saver who still prefers fixed deposits in India versus other kinds of investment? That what can he expect at the end of the year on his fixed deposit?
I think last year it was a clear-cut preference for the bank fixed deposit. Okay, and I think this would continue for some time. I think in the current year also, the bank would continue to offer a reasonable good rate of interest on the fixed deposit. So at least I would be saying, as far as safety is concerned and the returns are concerned, I think the fixed deposit of the banks would be a very attractive proposition for the investors.
Mr. Kumar, you have helmed this bank, and uh, some years back there was a bit of a issue, and now it is one of the most stable and growing banks in India. Purely from your own balance sheet as a company, there were some reports of a stake sale and sort of further bolstering the overall strength of the bank in terms of its financials. Where does that exercise stand to?
So current, like if you see the balance sheet size for us is 3.5 lakh crore. Okay. We are growing organically, but there is only one issue that because non-meeting the PSL target for the small and marginal farmers, you have to put a lot of money in the RIDs, which is not a profitable thing for any bank. Okay. To address this issue, this year we would be looking definitely for a inorganic uh, growth on the microfinance side, where we would be able to meet our priority sector commitment, which would be a long-term solution for this problem. So I think we would be definitely looking for an inorganic opportunity to meet the priority sector, especially on the microfinance.
Okay. Mr. Kumar, as we end this conversation, I want to dial back on the broader point of our interest rate environment and inflation. What's your own reading? There is, of course, the guidance and commentary that we have got from the MPC, but your own view on how inflation as well as the interest rate scenario is likely to pan out over the next 4 quarters.
I think for our country, it's always like a trade-off between the inflation and seeing the growth. Okay. So I think in this trade-off, at least I would be seeing that after increasing the rate of interest by 250 basis point, okay, inflation also, and whatever we do now, the impact on the inflation has a lag effect. It takes almost 6 months actually to having that kind of impact. So I think if all other say parameters in terms of monsoon, in terms of crude oil prices, or in terms of international events, if there are no major surprises, I would be saying this rate of interest to remain stable in this range and then start coming down.
Okay, that's going to be good news for various kinds of borrowers for a growing economy like India. Mr. Kumar, thank you very much for your time with us. Take us through the latest numbers and the outlook for the economy on behalf of Yes Bank. Thank you very much.
Thank you so much. Thank you.